Home price growth continuing to decelerate. The Standard & Poor's Case-Shiller National Home Price Index posting a 4% annual gain in February, but that is down from January's 4.2% growth, marking the 11th straight month of deceleration. But there is a surge in pending home sales. The National Association of Realtors saying pending home sales rose to 3.8% in March, beating estimates of 0.7%. So could this rise signal a spring rebound for housing? Joining us is Villere Funds portfolio manager Sandy Villere. Sandy, let's start right there. What do you think the numbers tell you about the direction the home market's headed in, the housing market's headed in?
Yeah, certainly. Well, you're looking at low mortgage rates when the Fed paused. I think that's definitely going to help help buyers out there. So hopefully they can work through some of this supply and can be okay. But when you see the the pending home sales and a little spike there, it looks like a pretty rosy spring here.
We were talking about a bit of a turn that we saw on the back of mortgage rates coming down just a little. But what do you think is pushing down home prices right now?
Yeah, I mean, I think certainly the supply on the market. I think we certainly with low rates for a while now, you've seen a lot of overbuilding, and I think people need to realize that it's going to be tough with these low rates to get any sort of return. So I think buyers need to be very careful, and perhaps that's what they're doing and staying on the sideline.
When you look at the pending home sales, how much of you think is seasonal?
I think it's quite seasonal. It's usually around this time where you start to see little spikes. And in my opinion, once we get through this, I think you probably see things maybe taper off, and it's going to be kind of a low rate for the for housing in general. I think it's going to just kind of taper off and moderate for the rest of the year.
So the big focus in the market, of course, the FOMC decision coming down tomorrow. We're not expecting a change in rates this week or this month, but you say lower Fed rates for housing is just fine. I mean, what are the implications for the housing market?
Yeah, I mean, it's interesting when you go back to 2018 and all the shocks we saw from the Fed. I mean, a complete 180, right? I mean, they said they were going to raise 2 times in 2019 and that sort of thing, and then come out in January and say that we're just going to pause and look at the data. And you look at the data, and you've got almost no inflation. So not only we're not going to see anything when the Fed speaks, but I think I think they're going to certainly. Just kind of, it's going to be more of a non-event than the fireworks we've seen in January.
When we talk about the housing market as a whole, there's been a lot of concern about the material costs going up on the back of the tariffs. On that front, we did get some comments today from the White House. Mick Mulvaney, the White House chief of staff, saying that he believes we'll get some kind of resolution on the U.S.-China trade deal in the next 2 weeks. It doesn't mean there is going to be an actual deal, but we'll get more clarity on which direction things are headed. What will that do in terms of unlocking the growth within the sector you're looking at? Because that seems to have been an overhang for some time.
Yeah, I think any resolution with China and President Xi is going to be a big deal. I think that we just need to get some resolution, right? Nobody likes uncertainty, and so when we can get some certainty and some way to put a pen to it and that sort of thing, then I think we can start to make some conclusions and figure out where things are going to go with a little bit more clarity.
Is there any way to put a number on that, though, in terms of how much higher things could push?
I don't have that specifically, but I do think any resolution is going to be a positive, and these things are adding to those costs that come in, materials and otherwise. So we just need to get some resolution, and I think that's gonna help quell those concerns.
And as you look ahead then, if we do get some kind of resolution on the trade front, what would you say is your biggest concern in terms of risks to the upside?
Yeah, so just looking coming into the year, the biggest concerns were not only the trade war with China, but we had at one point we had an inverted yield curve. Rates were going higher. Now we've got kind of a different. It just seems to be a lot more smooth sailing. You got earnings that came out that are for the most part. If we've had 50% of the companies or more report, 80% have kind of had good earnings or better than expected, and now you've got a yield curve that's steepening again. Fed wants to stay lower for longer, and so to me it looks pretty optimistic.
Okay, we'll have to leave it there. Sandy, it's good to have you on today. Sandy Villere joining us there.